Grown-up conversation with people who know their stuff. That's what we do here on The Money. And when Liz Truss was recently asked to name an economist who agreed with her tax plans, she did indeed cite Patrick Minford, who famously advised Margaret Thatcher when she was Prime Minister back in the 1980s. Well, today we're joined here live on The Money by none other than Patrick Minford, Professor of Economics at Cardiff University. Catherine McBride, friend of the show, fellow at the Centre for Brexit Policy, is also with us. But let's talk to Patrick for now. Patrick Minford, great to see you here on the show. You're most welcome. Do you think Liz Truss's tax policies are credible?
Yes, they're not only credible, they're vital. Because if his corporation tax increase goes ahead, and also the NICs, the rise in the national insurance contributions, they both reduce supply. And they have an effect on growth. And corporation tax is paid by the vast majority of small and medium-sized businesses in Britain, which are the main engine of the economy. And putting it up would damage growth and innovation by all these entrepreneurial companies. And that's the key point, really. While also the national insurance contributions will push up wage costs. By reversing this, she puts growth first. And all this talk about recklessness, and fairy tale economics is absolute nonsense. Because the basic point is that debt and borrowing is an instrument of government policy. I mean, we are a major nation and we borrow in the world at very low interest rates because we're regarded as a safe haven for debt, and that's something we can use for our policy. And all this talk about these fiscal rules that the IFS mentioned, these are nonsense. What matters is your long-term solvency, and whether over the long term you can cut your coat according to your cloth and make sure that you can pay your debts in the end and bring the debt ratio down to a safe level. And that's the key point, not short-term fiscal rules. So all this talk about headroom and, is the 30 billion in the kitty at the moment is really a complete side issue, because we are able to borrow as a big nation with this reputation in world markets, and that's an instrument of policy which allows us to keep taxes to support growth and do spending as we need to support growth too in the economy. And what we need to do over the long term is balance the books. But that's a long-term issue, not a kind of an issue of balancing the books, over the next year or so. That's a complete irrelevancy.
Professor Minford, you spent a lifetime talking about British economic policy, indeed being influential at the top of economic policy making from time to time, not least during the early and mid-1980s. Liz Truss has said that Rishi Sunak has been captured by a Treasury orthodoxy, an orthodoxy which, in her view, has held for several decades, which has failed to deliver growth. Do you agree with Liz Truss? There is a Treasury orthodoxy and it is ineffective in fostering economic expansion.
Yes, I do agree. I think that the Treasury has captured Rishi Sunak with this orthodoxy, which is embodied by these silly short-term fiscal rules, which are really a way of embedding Treasury's power to kind of keep control of everything. Now, I'm in favor of the Treasury having power to control spending over the long term, but it should be carried out intelligently, allowing us to have a competitive tax system. I mean, when the Treasury spent 500 billion on COVID, because obviously it had to, it then turned around and said, but you can't spend any more, in the coming years than that will put up borrowing, because we can't do that sort of thing. And of course, transparently, that is nonsense. Having spent 500 billion on COVID, in the way of borrowing, it's obviously transparent nonsense that you can't borrow to prevent taxes being put up and destroying growth in the economy. So yes, the Treasury orthodoxy has been put in place it sort of started after the financial crisis with the austerity program, which was a big mistake, as we know in retrospect, because it put all the job of keeping the economy recovering on the Bank of England and quantitative easing, the buying of bonds in the financial markets, which has been not a very successful policy. It's driven interest rates down to zero. That's what we need to get away from today. So the Treasury orthodoxy that started after the financial crisis has been a disaster for the British economy. And of course, it goes back further with the EU regulation, and the gradual drift upwards in top tax rates has been allowed to happen under the Treasury's regimes over this period. All of this has damaged growth and needs to be firmly put into reverse. Much as Mrs. Thatcher challenged the Treasury orthodoxy in her day, they opposed monetarism, which was needed to bring down inflation. And today, they're imposing sensible tax policies that will be in favor of growth.
Hold it there, Professor Patrick Minford. I'm just going to turn to Catherine McBride in the studio. Now, Catherine, in this discussion, Professor Minford backs Liz Truss's tax cuts. I know you do as well, so let me push back a little bit. It's my job, as you'll understand. We're borrowing quite a lot already, aren't we, as Rishi Sunak says? Surely that 30 billion quid is there for emergencies. Isn't it irresponsible to spend it on tax cuts?
Well, we've just heard in the previous segment that 8 million people are going into fuel poverty. If that isn't an emergency, I'm not sure what is. But Rishi Sunak was happy to give people £400 each, everyone, every household, for their fuel costs. And he didn't seem to see that as inflationary, and he did that only a few months ago. But now Liz Truss cutting £153 in green levies off our fuel bills, that will be inflationary somehow in Richie's magic land. I mean, talk about crazy. There is, in any system, you have a maximisation where you can get the most out with the least inputs. And in economics, that's known as the Laffer curve, described by the Laffer curve.
You get more tax if you lower the tax rate because you get more growth.
Exactly, you get more growth. And we have seen this in this country in two examples by Sunak while he was Chancellor. One was last year, he had the stamp duty holiday, and suddenly house prices, house sales went through the roof.
So you got more revenue.
Taxes, which proved that we are overtaxing the transaction costs of moving house, because it also boosts mortgaging, conveyancing, painters and decorators, white goods, furniture. All these other industries benefit from people moving house. And then, as we discussed 2 days ago with the doctors, by overtaxing them on their pensions, they all retire early. And that is the absolute epitome of the Laffer curve, where we actually get to a point where people stop working because of the way we tax them.
Now, the European Central Bank raised interest rates across the Eurozone yesterday for the first time in 11 years in a bid to tackle inflation. Eurozone rates rose from minus 0.5 to 0. I kid you not. But there are more rises to come, and this move means the Bank of England is probably more likely to raise UK rates again in early August. Now, the Eurozone economy has been struggling in recent months, and there are fears higher borrowing costs could tip the region, which remains hugely important to UK trade, of course, into recession. Vladimir Putin's threatened to cut off gas to Germany. Italy's reeling after Prime Minister Mario Draghi resigned. And some are concerned the Eurozone could once again experience the kind of turbulence when Greece was almost forced out back in 2011-12. I'm still with my expert panel, Professor Patrick Minford. Let's talk to you. You used to advise Margaret Thatcher. You famously clashed with someone called Nigel Lawson back in the day about the European exchange rate mechanism. To be fair, you've been a very prominent Euro sceptic. But as an economist, as an analyst, as a forecaster, what are your thoughts on the Eurozone at the moment as they raise interest rates to the heady heights of 0?
Well, they're under the cosh, really, to raise interest rates because of inflation. And, of course, they're being heavily criticised inside the Eurozone by Germany for having allowed inflation to rise so sharply, because Germany's argued that they've had much too loose a monetary policy. And as you pointed out, they went to negative interest rates in the course of doing their loosening of money. So they are in a serious situation where they have to tighten money. And of course, the big dilemma for them is that as they tighten money, they make countries like Italy look more and more dicey, pushing them into potential recession and pushing up their rates that they've got to pay on their debt. So that's threatening, the same sort of crisis that they had with Greece. And they're talking about some way of kind of buying more Italian debt to kind of keep the rates on the Italian debt down, stop the so-called spreads, against Germany and so forth. But the trouble about that is that they're not, again, Germany opposes this because they say you can't do that. You can't give a special deal to one of the countries in your borrowings and the buying you do of their bonds, when they're not necessarily obeying the rules. So there's a lot of controversy about this, and I think there's a crisis brewing of quite substantial size, and it may well be that, the euro is going to come under a lot of strain.
Catherine McBride is still with us, of the Centre for Brexit Policy. You're also, a well-known Eurosceptic, but none of us really want the Eurozone to go back into turmoil, do we, the way it did in 2011, 2012, because this is a huge area, hundreds of millions of people, a massive collective economy, a big part of our trade, of course. It would really hammer the UK if that happened, right?
It would hammer the world, actually, because the euro has become a major trading currency. But the real problem they have is they're importing inflation in US dollars because they import so much fuel, and especially Italy. So, in fact, this will help Italy survive because right now, if they let the euro sink more against the dollar, because we saw the dollar increase their rates by 1/4 of a point in June, and they're expected to raise it by another 1/4 of a point, 3/4 of a point.
Higher interest rates push up the dollar, right?
Push up the dollar.
So the ECB has now raised rates, hopefully to push the euro back up.
Yes, exactly, or at least keep it in line. They're not raising as much as the US because they understand that they can't do that. They don't want to, as Patrick said, squeeze people too hard. But at the same time, they can't go the way of Sri Lanka and Turkey, where their currencies have fallen so much against the US dollar, which is kind of good for exports, but tragic for imports. And if your imports are denominated in US dollars, like oil and gas, then it really hurts.
We've talked so much, haven't we, Catherine, over the weeks and months about the impact of exchange rates on inflation. If you raise your interest rates, it hopefully pushes up your currency, makes your imports relatively cheaper, particularly if you're importing lots of fuel, particularly in dollars. Just briefly to Patrick, while we've still got you, Professor Minford, I wanted to ask you something a bit more personal. You are a very high-profile economist. You've been a huge name in British policy-making for much of my adult life. I remember writing about you in my economics A-level, crikey. But when you are cited, so many people, so many of our political and media establishment, if you like, rush to criticise you personally. Why do you think that is? And how do you feel about that? Because your forecasting record, it seems to me, has been pretty good.
Well, that's very kind of you, Liam. I don't really pay any attention to it, to be quite honest. I write books and I write articles saying what I think, and I'm doing research on how the economy behaves. And as you know, we did research on the effects of Brexit through free trade agreements and so forth, and said that this would be very good for the British economy, as both you and Catherine know. So I just do the research, and I think the research we've done on how the economy works backs the sorts of policies, of Brexit and Liz Truss's supply side program going forward. And we've discussed all that, and I think that, of course, the people who attack this are just really attacking. They're all part of this orthodoxy, as we saw with Brexit. They are part of the sort of orthodoxy that Britain's declining, and all we can do is kind of manage decline, and there's no point in trying to kind of cut taxes and leave the EU and try to get regulation down, all of which I totally reject. So I would expect them to attack me, and I'm really quite flattered that they do, because it shows that we might be getting somewhere.
It strikes me, Patrick, and I remember when in the early 80s, 364 economists famously wrote to the Times saying that Margaret Thatcher's policies, as advised by you, were wrong. But in the end, you turned out to be right, the historic record shows. Maybe they've just never forgiven you for that. What do you think?
Well, I don't know, honestly, Liam. I mean, all I know is that, I know what I think is right, and I'm going to go on defending it. And I think that's, why I think it's right is because I think it's for the good of the British economy. And I'm in favor of the British economy doing well, and I think it can. It's a great economy.